before I head into chapter 1 content, just kind of quickly, we didn't get a chance to look at this on Monday because I talked too long about the syllabus and stuff. So chapter, each week, and if you got me for intermediate, you already know this is kind of what I do. I do like to sort of lay out what we're going to cover for the week, so you've got a weekly agenda there. You can certainly take a look at that. I kind of pretty much based on doing each day off that. PowerPoints, I'm not going to print those and distribute them. I mean, you guys can do that if you want. If you want to look at them on your laptops, that's fine. I talked about that already. Demo problems are just data for a problem that we'll do together. Kind of it's like a warm-up to the exercises and the graded homework. So you can think of it that way. And then you can see I plug my recorded lectures in there Monday, Wednesday, Friday each week. Okay? All right, so let's kind of, before we actually head into content, I do like to take a look at the opening business, just usually talking about, you know, kind of something that sets the tone or the context for the chapter, the content that we're going to cover. So one of the things that we start looking at in chapter 1, sort of a general overview before we kind of dive too deeply, is how do businesses add value? And, you know, I know that most of you in here are probably accounting or finance majors or minors, but this information that we cover, and just because, you know, we kind of go into a little bit more detail than we did in managerial, it's still really applicable to anybody in the organization. I like to use, you know, examples, common examples. You know, when we have, every year I, you know, tasked with, you know, entering some information in a spreadsheet for the annual budget. And that's fine for me, you know, I know what I'm doing, obviously, right? And I mean, I'm an accountant. But, you know, besides me, Ms. Dunlap, and a couple people over in the business office, there aren't really that many accountants that work here. And so, but everybody's required to contribute to the budgeting process. So that would mean that they have to have some knowledge, right, of what their area of numbers and budgets, what that represents. And so I want you to think of this more from a managerial perspective, not so much from an accounting perspective. Although we do some accounting things and we do a little bit of journalizing, we don't do a ton of that in here though. The focus is really more on here are the numbers and what do they tell us? And then what kinds of decisions can we use, what can we use these numbers for? What kind of decisions can we make based on the information that's provided? And so there's usually an underlying theme or underlying example in every chapter, and that's what this, basically this opening article is. So we have this gentleman, his name is Adam Mercer, and he is the owner and founder of the AM Bakery. I opened the bakery shortly after I graduated from a local culinary school. I've always enjoyed baking. And owning my own bakery will allow me to experiment a bit. So far, the financial returns from the store have been sufficient for me to survive. Such a common statement from somebody who's very entrepreneurial minded, but not so accounting minded, right? But I am not sure if they will be enough for me to continue. I took some courses at the local community college last year, hoping to learn some business skills that will help me really take control and increase the store's value. One thing I need to do is develop a better understanding of my costs. And this person is smart enough to recognize that right off the bat. If you know, we've talked before in other courses, this is pretty standard statement I'm gonna make. If you wanna improve your bottom line, if you wanna increase your income, there's only one of two ways you basically can do it. One, you sell more, right? You increase your revenues. Or two, you reduce your costs. So we're all about reducing costs in this class, for the most part, right? I cannot improve my bottom line unless I do one of those two things. Before you can start reducing expenses, you really have to understand those expenses and how they, and I use the word behave, but how they react to economic conditions, right? So you go to and maybe some of you are saying, well, I don't go to the grocery store. Well, somebody in your family goes to the grocery store at some point, and you know, you hear talk all the time about like inflation right now and how it's, you know, it's expensive to feed your family and so on and so forth. So, you know, if you're going to the grocery store with a budget in mind of how much you want to spend, Well, I hope you had, like, you worked on sort of laying that out and figuring out what it was exactly you were gonna buy and what meals you were gonna eat each day of the week, because if you just go, like, I got this much money to spend, and you just head in there unprepared, you know, you're expecting maybe, you know, hamburger to be this price or chicken to be this price, and it's something else, right? You're not going to stay within your budget. You're gonna have, or maybe you're gonna come home with things you didn't want, or you're gonna come home with things that you didn't get, right? So those types of things, you have to really understand how your costs react to economic conditions. And so it's very smart for this person to recognize that if he doesn't have a good understanding of his costs, then right now he's in survival mode. But you know, we know that most small businesses unfortunately fail, right? Especially within the first 5 years. And why is that? It's for this very reason, because people don't understand costs. And a lot of times it's like, you know, an ignorance thing. A lot of times it's, well, you know, I left this up to somebody else, and they didn't know what they were doing. Especially if you want to own your own business, right? You've got to understand how these things work. So it says, this semester I'm taking a cost accounting class. I know a little bit about this subject, but I know there is a lot more to learn. I'm curious though how this class will help me. I need to decide whether to expand the business or to fold. Those are two extremes, but you know, this is a textbook. So if I expand the business, I need some help on managing my costs and remaining profitable. I need to decide soon whether to expand or to close down and maybe go to work as a pastry chef in one of the local restaurants. Which would certainly be a lot easier, right? Then he doesn't have to worry about all the questions that he's asking for himself. But as we know, you know, pros and cons to anything, right? Adam Mercer is the owner and founder of the AM Bakery, which he opened 3 years ago. The bakery has been marginally profitable, so he's getting by, right? But Adam knows that he must make a decision soon. Should he expand the business and work on making it financially viable, or should he abandon it and look for a job baking for someone else? When you think about the decisions that restaurants and bars had to make, other entertainment business, you know, people in the entertainment business during COVID. I hate to bring up COVID, but it always provides good examples. You know, you go from having this highly successful bar, restaurant, you know, you're full every night, you're open for lunch and dinner, and then all of a sudden, you know, COVID comes along and somebody tells you got to shut down, you can't sell anything. You know, people had to get kind of creative pretty quickly as to how they could continue to at least make some money and keep their business open during that time. And a lot of those decisions would be based on the knowledge that they have about their costs and their cost structure, that kind of thing. So we're going to start off talking about, you know, how do we add value to the organization? And so I'm not gonna go through all these slides in great detail, but some of them obviously are worthy of. I'm not going to go through that. Worthy of our time. The value chain, and you guys might have heard this term in a management class. When we talk about it, it's a very common topic in management types of courses. But you know, how do you create value? And value is obviously it's not something that's necessarily tangible, right? And what might be value to you may not be value to me. And so there's all these differences. So I think it's a difficult thing to nail down. It represents the set of activities that transforms raw materials and resources into the goods and services that the end user wants to purchase and consume. And ultimately, who's making the decision about is there value? It's the customer, right? You guys have heard that phrase, the customer's always right? There's a lot of truth to that. You might think your product's fantastic. Does it matter what you think? You're not buying it, right? I mean, you might be, but ultimately your customers need to feel the same way. And so, you know, it's easy to like think, well, I do this, and this, and that's how my product's gonna sell, or why it's gonna be great. But somebody else might have a different opinion of that. So it's not always easy to kind of nail that down. But notice it says those activities that customers perceive. So it's the customer's perception. And we sometimes lose sight of that. For whatever reason, ego, we know better, we have more experience, that kind of a thing. But you know, we're talking about adding utility. We're adding usefulness to your products. And that's because that's what customers want. And I think it's more challenging in this day and age because of, you know, technology, social media. I've talked to my classes about this before. As soon as somebody doesn't like something, what do? You got to hit the social media. You got to leave a review, right, or make some kind of nasty remark. And what I find very interesting is even if it doesn't have any merit, what does the owner of that business automatically do when there's a nasty comment or a poor review left on, for the most part, generally speaking? Oh, that's sometimes. Most of the time they reply. And it's always, I'm sorry, right? Like an apology immediately that you've had this experience. Please contact, and maybe no one's ever doing anything, but the perception is to someone who is reading the review is that, okay, they've handled this is good, like, so if anything happens. I mean, and I don't know about you, but I look at those reviews and I get overwhelmed, and then you kind of have to step back and remember that, like, my perception might not be the same as someone else's. Sometimes when you read those reviews, like some of the comments of a bad review of a product that typically gets good reviews is some stupid thing that was like beyond the control of the person who was selling it or something like that. But, again, perception is really key here. And so you have to realize that when you're making these kinds of decisions, you have to try to think how other people are thinking. And that is not easy to do. Okay, so there are multiple components to this value chain. And I'm not going to go through these. I think these are mostly self-explanatory, right? And it kind of follows the life cycle of your product or your service. So research and development, somebody tell me what that is. Yeah, like maybe coming up with it starts with an idea, right? And a prototype. I don't know, how many of you get super excited when, like a company that you typically buy things from, like has a new product? And you're like, excited about it. Or do you care? Like, I don't know. I'm always like, I like the old thing. But that's my generation, right? So, you guys are more open to new and change and that sort of thing because you're so used to it. You know what I mean? And I can't remember the exact numbers, but I watched a TED Talk, and this gentleman, he's an older gentleman, but he was talking about when he was growing up, how many different kinds of blue jeans he could purchase, and it was like two different kinds. And now there's like 200 and some, and he's like, I just want the same jeans that I had before, that kind of thing. And even, you've bought something, you've had it for a while, and you go to replace it, you're like, I can't find the same thing that I had, but I just want the same thing that I had before, right? Well, I don't know, they think we need more and better and different than we had the last time. So research and development, that's a big one, right? And a lot of ideas never come to fruition. You could even get to the prototype stage and something doesn't move forward, right? Design, what's design? It's design, right? Define the word with the word. I mean, it's what's going to look like, right? You're defining what it's going to look like. And again, different tastes, different generations have different, sort of feelings about things and preferences. Purchasing, so then where are you going to get all of the materials that you need to make this thing, to make this product? Production in the middle there. And production, who can remember from Accounting 102 what the three main manufacturing costs are? Direct materials, direct labor, manufacturing overhead. Yay, very good. That was like a few semesters ago. Yeah, that's awesome. So that's production, right? And we'll get into that a little bit more later on. Then we have marketing and sales. And for this is the fun part for people with creative minds, that kind of thing. That's not me. I don't ever pretend like it's going to be me. But I'm always fascinated at, some of the, I find myself, like, I always think when I laugh at a commercial or I watch a commercial, I'm thinking, because I try to pause as I think about all the stuff that I teach. I'm like, boy, I'm so typical of who they're marketing, who they're targeting for that particular product. And I responded exactly how they probably thought someone like me would respond. Marketing and sales, obviously you got to get the word out, right? You got to let people know. And then distribution, how, shipping, that kind of thing, or what stores is this going to be in? And then customer service. And customer service is huge because if you think that it ends when your product is sold, you are sorely mistaken, right? Because again, I just mentioned a review, right? And then, you got customers that have problems, they're going to come back. It's not like a one and done thing. It's usually like some kind of relationship, excuse me, that you're establishing with folks. I mean, how many of you tend to buy the same things that you always buy? You know what I mean? Like you have certain favorite products, and you're a repeat customer, right? And that also comes from good customer service. we need a way of managing the data that we're gonna be kind of pulling out and we're gonna be looking at. So this is more about just sort of kind of making sure you understand that the data we're using is the exact same data that you would use in financial accounting, in auditing, any accounting course really, okay? So, you know, we learned in Accounting 101, you learned the basics of the 10-step accounting cycle, recording, reporting, and then interpretation, right? So this kind of falls under that interpretation part. So the reporting and the recording is done according to GAAP because we have to prepare reports for external users. But in this course, we're focused on the internal piece. And so people that work in the organization obviously need to use the data too. They might not need to look at the income statement as prepared according to GAAP, like the bank would want to look at. They might want a report that breaks down revenue by location and salesperson. Like the bank doesn't care about that. They just want to know what your total revenue is. But internally, you want to see what your salespeople are selling and in what areas they're selling. That's going to be a report that is just for your eyes only, right? So we're not reinventing the wheel here. We're not doing any kind of different journal entries. We're taking the same data that we need for external reporting. We're just using it to serve a different purpose. That's all. And that's kind of what that slide sort of describes there for us. All right, I already said all that. So we talk about customers of accounting. You know, a couple of different things. If you are actually, if you're an accountant working in a firm, then you're just the person who everybody says, I need this information, I need that information, I need you to do this report, I need you to do that report. You may be making decisions with that, data in mind, or helping somebody make a decision. You may be explaining the information to someone. I feel like the latter is probably what I like to focus on, because usually people that need the numbers don't understand the numbers. And so what we want to try to practice in here a little bit is our skill set of providing a narrative with the numbers. So when we do cases or we look at exercises or problems at the end of chapters, and we do things like that, I want you to start thinking about how, and we did this in accounting information systems for those of you that had that class. You got to start thinking about, okay, I know what the numbers mean, but I have all this education now. Like I've taken all these courses. The person that I'm, providing this data to doesn't understand it. How can I best explain it to that individual? So that's the other thing. You have to realize not everybody's on the same page as you. And, and that's sometimes, I remember feeling that way sometimes about some of my professors. Well, this guy's been an accountant for like 50 years and he comes in here and he says debits equal credits and I'm supposed to know what that means, right? So you've got to make sure you know who your audience is. And your audience isn't always at the same level of knowledge in your topic as you are. Most likely they're not. And so we're gonna try to work on that a little bit too in here, like trying to explain things to people. So this is just a table that sort of identifies the key financial players. I'm not going to spend a whole lot of time on that. This is just kind of typical of an organization. This isn't like the same across every organization. But I think the key to this is knowing who is responsible for what and what is it that they do exactly. And I think they have cost accountant on here. And you might not have that exact title, accountant 1, accountant 2, those are common things. It depends obviously too on the organization in which you're working, what's their structure look like, right? So, some of the more common titles would be the chief financial officer. I know everybody's heard of that, the CFO, right? The treasurer, the controller, internal auditor, not everybody has one, but they make sure that things look good before the external auditor gets there. And then the cost account would be somebody that really just focuses on the numbers and the analyzing of the data, right? So we'll get into more of that. Ratio analysis kind of falls under there, even though we don't really cover too much of that in here. That finance piece kind of rolls into this a little bit when you're looking at data. But our goal, again, we're going to be making decisions. So the idea is, how do we take the data and how do we look at it? How do we create reports that are going to help us to make the best decisions? And so that's really what the key thing that we're going to be focusing on in here. We use the data, basically 3 purposes: decision making, as I mentioned. We also use the data to control costs and for evaluation, okay? And then we use the data just to make decisions about the future. Like, do I want to expand or don't I want to expand? Kind of like AM Bakery story there we started off with. So, you know, this is the question that was posed in that opening little paragraph there. AM Bakery has been making and selling baked goods through a small store. One of the customers suggests that the business expand operations. So like the customer just walks in, loves the baked goods, right, and says, hey, I think it's time you bought a food truck. And you should have that food truck at the morning and afternoons in the office park. You'd probably sell a ton, right? So this kind of puts the idea in AM, Mr. AM there, right? And, you know, should the company expand operations? Now, is that a question we can answer right now, just given the information that's here, which is like next to nothing? It's just an idea, right? So what are some of the things? Let's say this is, you know, this gentleman was talking about maybe even like closing down shop at the bakery. Now somebody comes in and says, well, what about a food truck, right? So let me ask you, before we even kind of get into just common sense, what are some of the things? What are some of the things that you would need to think about in order to entertain this idea of a food truck? So right now he's got a bakery, right? Upfront expenses, like startup costs, right? Well, like the one that's kind of like, what's the biggest one that I would think you would think about here?
Oh, I was gonna,
Go ahead, say what you were gonna say.
I was just gonna say make sure he has like enough employees.
Okay, so yeah, so he's gonna probably need more employees, right?
Yeah.
Because if there's a food truck while the bakery's open, you know, one person can't be in both locations. So what's his biggest startup cost, do you think?
Probably the truck.
Probably the truck, right? I mean, I don't know, food trucks aren't like just sitting around waiting for people to buy them, are they? I think people usually convert some kind of, right, vehicle into a food truck, right? What else?
Cost for more food.
Yeah, I mean, you know, what's he gonna sell out of the food truck? So there goes his, you know, his materials, direct materials are gonna go up.
We need a permit from the office part.
So you might need a permit, right? You might, like, you don't just show up with your food truck, right, and start selling things. Depending on where you live and, you know, your district, your county, there's all kinds of rules and regulations, right? And sometimes you find out too late that you were supposed to get some kind of permit or something, but you should ask those questions first, right?
Factoring in like the gas and how much it's gonna have to cost.
Yeah, like just the upkeep of the truck itself, right? And what that would, so there's a lot of expenses here, right? Okay, so you guys are all talking about all these costs. That's fantastic. What's the other side of that though? Like,
How much more revenue.
yeah, so how much more revenue? So this is the part, and I'm kind of glad this is not the part that I'm in charge of, because I think this is the hardest part, right? How do you figure that out? How would this guy go about figuring out if he thought his food truck could be successful?
Like demographics and surveys, like
Yes. So demographics for one, right? Surveys for another. Maybe like the office park, are there other food trucks? I don't know. Were you gonna say something else?
I was just saying like disposable in that area.
Okay. Oh yeah, the income of people in the area who visits the office park, right?
Maybe just like comparables.
Yeah, try to comparables. That information, that sounds all great, but it's not necessarily all that easy to find too. Can you make any suggestions with that? Like, what would you do if that was you? Like, I mean, I know you do a Google search, but that's not always gonna bring up, you know, provide you with the information you want to.
Maybe go to other companies if they have a food truck.
That's what I was hoping someone would say. Find somebody else with a food truck, right? And maybe, you know, walk around that park at the break, at breakfast and lunchtime. There are other food trucks. What are they selling? Do you even need, are there baked goods already being offered in somebody else's food truck, right? So many different things. And then you have to kind of do some kind of pro forma financial statement. What's that mean? Let's say you get all this information, get all this data, but it's just like a big lump of data, right? What do I need? What's a pro forma? Anybody know? Yeah, projected, right? I gotta try to come up with some kind of projections here. Because, I mean, I'm taking a chance no matter what. Like, I'm never gonna be able to determine with 100% certainty that I'm gonna make money or not make money, right? I use the information, I do as much research as possible, I gather as much data as I can, I bring it all together in an income statement, right? And then at some point you just gotta go for it, yeah? And you hope that the data that you've gathered provides you with enough solid, you know, information that you're making a good decision. But you can't be sure. But then again, you gotta take a risk anyway. So here's one of the things that, what the heck's his name? Adam. I keep calling him AM. I'm gonna call him Adam. Adam has to first identify, hey, in my current bakery, right, what are my costs? And we're keeping it simple, right? You guys realize there would be more, but Adam knows a little bit, right? So he's categorized his expenses, his costs, into 4 categories: utilities, marketing, and then labor and ingredients. And pretty simple, right? And if you think about a bakery, you could probably come up with some examples of each of those kinds of costs, more specific types of costs. What he did here was he put them in 2 categories based on what drives those costs. So I know everybody gets sick of me saying this, using this example, but I don't really care. I drive here, I drive like 70 miles round trip, so miles driven is what drives my gas expense, right? As much as I love seeing all you people and I love being on campus every day, you know, when I'm on a break and I'm not putting gas in my car every few days, like it's okay, because you know, I'm not spending all that money on gas. But I certainly know that miles driven is going to be the driver, right? Cause and effect, right? Cause of me having to spend money on gas. That's simple. So for Adam, he realizes that both his utilities and his marketing costs are driven by the number of distribution channels he has. And right now, how many distribution channels? And what do I mean by a distribution channel? Give me an example for Adam. What is his distribution channel? The bakery, right? How do you distribute the baked goods? Well, he only has one, it's the bakery, right? So he has 1 bakery right now. That would change though, right? He would end up going from 1 distribution channel to 2, and then he would have additional expenses associated with that distribution channel, right? And then the second driver is the number of baked goods, right? So more cakes, pies, donuts, whatever, more ingredients, obviously, right? And the more that you sell, the more bakers you might need. So we've got labor and ingredients falling into that category. So he's smart to have said, okay, now he's got to look at, like, how does a food truck impact the costs that I already have, and will I have any more drivers of costs if I have a food truck? So these are some of the questions that we're going to be answering. Isn't that exciting? See, I love things like this. So one of the first things that I'm going to show you, I'll show you this shortly here, because actually it's coming up here. So there are basically, there's a place where you kind of focus your attention. And let me try to, because otherwise we're like doing all this data collecting and just numbers. Have you ever looked at something and felt overwhelmed? There's like too many numbers on a page, right? Maybe you feel that way every time I hand you something. I don't know, right? But it, like, too much is overwhelming. So you got to be able to kind of sort through the data. So what you want to look for is you want to do comparisons. So we're going to be looking at a financial statement for Adam that is currently what he's experiencing. We call it the status quo. You guys have heard that phrase before, status quo, the way things are now, what is, right? And then we're going to try to do the pro forma, the projections. This is what these numbers will be if we add the food truck. So you're doing like bakery only compared with bakery and food truck. And the bakery and food truck column is going to include all those costs that you had to research and find out, right? We want to focus on the things that are going to be different, cost and revenue-wise, because those are the things that ultimately are going to impact our bottom line. The stuff that stays the same, we don't need to look at. And I want to try to sift through that data, and I want to focus only on the data that's going to help me make a decision. So the data that's going to help me make a decision is the data, listen carefully, that's different between the 2 choices that I have. We always have a choice, bakery only or bakery and food truck. Those are the 2 choices. I'm going to compare the revenues and expenses between those 2 choices, line by line. The revenues and expenses that don't change, I don't consider, because they stay the same no matter whether or not I buy a food truck or I don't buy a food truck, right? I'm going to pay them either way. For example, I pay a parking fee every year to park here. It's a flat fee. That doesn't change.
You charging it?
Yeah.
That's not.
It's not a lot, but it's once a year. It irritates me, but it's not. It's once a year. Yeah, they take it out of my paycheck. I think in October. I think it is.
They do that to us too.
Well, but anyway, so yeah, so once a year I get, I don't even know, I'll be honest with you, I don't even know what it is. But does it matter how many times I drive to campus? Does it matter if I decide to get a different car that gets better gas mileage so that my gas, that fee does not change, right? So am I gonna consider, like if I'm trying to think about, do I buy a new car that gets better gas mileage since I have to drive here so much, am I gonna consider my parking fee in my decision to buy a new car? No, because my parking fee isn't gonna change. It's gonna stay the same whether I drive the car I have now or I buy a different car. So I'm gonna ignore those costs. Now that's because that's a cost associated with me driving here, right? But it doesn't change between my decision to keep my car or get a new car. So I'm not even gonna pay attention to it, right? That's what we mean by differential costs, and revenues work the same way. If you're graduating and you have two great job offers and they both start you out at the same exact salary. And some of you, that'll happen because a lot of these firms are close in salary range. Is salary going to be the reason, the deciding factor for you? Both jobs are offering you, I don't know, $65,000 a year. Well, you're not gonna say, well, I picked job B because they have the higher salary. No, it has the same salary as job A. That's not even gonna play a role in your decision. Now, you might look at time off and benefits, other benefits like health insurance and incentives, other types of, employee benefits and incentives. That will help you make your decision because you're gonna pick the better of the two. They're different, right? So things that look the same, we ignore. Things that are different, that's how we're gonna make our decision. So these two slides just have the definition of what we call differential costs and differential revenues, and I just explained them to you. So Adam did that. See, Adam's smart, right? Adam decided, hey, this food truck thing, maybe this is a good idea. And if this is right out of your textbook too, but this is also in the PowerPoint. So we've got Adam's Bakery, and he did a projected, also called a pro forma, income statement for just a regular week, what he considers, what he calls a representative week. This is a typical week for him. And what he has here in column 1, well, let's look over here first. We've got, look, this is the simple income statement. Go back to Accounting 101, revenues minus expenses is net income. That was the first thing you guys learned about is an income statement. And that's really all this is. Sales revenues, the word cost instead of expense, same thing. Minus your expenses is operating profit instead of net income. Same idea, right? So he's taking the status quo, bakery sales only. This is what he typically earns in a week. These are typically the expenses he has in a week. So his average sales in a week, 11,200. These are the things that he spends money on. You'll notice here, he's inserted at the bottom truck lease and truck costs, right? Why? And they're zero for now because he's going to compare this column to, let's say I got the food truck, because then he's going to have those expenses. Obviously, they're zero now, right? So you do have to add in any new costs that you might incur, and there'll be zero for your status quo. So total cost for about a week, $72.25. So Adam makes about $39.75 before tax, by the way, at the bakery in a week. All right? Nothing crazy there, right? Everybody good? Okay. Now, we go on to column 2, and this is what we call differential analysis, by the way. We go on to column 2, alternative. Is take the original bakery and add the food truck sales, right? And we just talked about all of the cost data that we'd have to try to gather. That's challenging to do. We're not here to do that. Somebody's going to do all that legwork for us and say, here are all your numbers, and then we're going to create a projected income statement. So you'll notice you got these, little A, B, C, D, E, F, little subscripts there to kind of help us figure out where these numbers came from. So with the food truck, the expected revenue is $16,800. And you'll notice it says that's 50% higher than the status quo. So the easiest way to do that calculation, and we're going to do this here momentarily with an example of our own, is to take 11,200 and multiply it by what? Someone tell me. Shortest way to do that. 11,200 times blank equals 16,800. Fill it in. 1.5. Yes, thank you. Right? So I always looking for ways to shorten up how long it takes us to do calculations, right? So you can do this one of two ways, right? Well, what does 1.5 represent? It represents, if I break this down, this is 1 plus 0.5, right? This 1 or 100% is this number, right? 50% is another half of that number together. Instead of taking 11,200 times 50% and then adding it back, The add back comes automatically because you've already added in the 0.5 to your calculation. Understand? Okay, so just a little shortcut there. So that's, and where the 50% came from, we don't know. Somebody did their, we just trust that whoever went out and figured out, you know, did the demographic thing and talked to other food truck vendors, they figured that out, right? The difference, now obviously, these two numbers are not the same, are they? They're not, that's easy, right? They're different, right? So it's an additional revenue of $5,600. So you do that for then all the costs, right? And you'll see each of these talks about, you know, 45% higher, 20% higher, until you get to, you know, the rent. And there's no change in rent, right? Because rent and lease are different. He's leasing the truck, but he rents the bakery. His rent is not going to change. As the food truck has no impact on his rent. So that is not, the difference is zero. So when you look at this column, you're not concerned about the rent at all. It's not even a factor in the decision. Okay? Truck lease is $900 a week. Wow, a week. And then $150 of costs. And again, wherever they get that, I don't know, that somebody did all that work for us, right? So your costs are going to go up naturally because now you have a different distribution channel. And ultimately, the difference over here, though, your profits go up $1,790 a week. So what do you think about that? You know, normally as accountants, we'd be like, there you go, we're done. But we have to be the accountants and the managers now. You got to do a little critical thinking here. So what are you going to do? You're going to go for it?
Depends if your SG&A costs and R&D costs are increasing too.
Okay. Well, let's just pretend these are the only costs we have right now. Yeah, you're talking about advertising and all that good stuff. Yeah. Yes. Okay. I think that's fine answer. I'm not. There's no wrong answer here. Can you tell me why? What before? Okay. Let me go back. Let me come back to you. Just because there's more money each week?
Yeah. Well,
okay.
Your operating cost is increasing.
Okay, that's fair.
Well, the fact that even, like, I don't know, yes, another food truck, like, you have to really advertise the weather and that kind of stuff.
Okay.
Seasonal and all that stuff.
So I love that you mentioned that because those are things that you can't what? Control and quantify. What do I mean by quantify? I cannot put a number on that. So many of the decisions that we're going to be talking about, and that's why I love this topic. I love this class. I mean, I'm a CMA for crying out loud. Like, this is my thing. But so much of what we use to make a decision, you cannot quantify. And so you have to decide, like how much does that matter to me? You know, it's like if you're buying a house and you find the perfect house, it's got everything that you're looking for, and it's right next to a highway. See what I'm saying? Like, I can't quantify that, but like, I don't want to live next to, like, you know, the interstate either. I don't care how perfect the house is. Do you see what I'm saying? So some of the factors that really, you know, some of the factors that influence our decision have nothing to do with money. They're difficult to quantify. So I want you to keep that in mind. If we just look at the money alone, yeah, sure, why not? But here's another way I want you to look at that. Is $1,790 a lot extra a week? Okay, we'll see. How do I figure that out? Some of you are saying, maybe not really. I need you to tell me how to figure that out.
I mean, you see, so you're bringing in about $4,000, and I mean, a percentage of it.
Oh, you said it, percentage. Okay, so you guys remember I teach this in 101, 201, econ, all this stuff. The percentage change is a formula that you should know because you have a brain in your head. It's like when I got my electric bill last month and I saw it and it was a lot more than the month before, and because I'm an accountant, I was like, I need to figure out the percentage of increase that was, right? And then I yelled at everybody in the house. Anyway, percentage change, right? And this is, you can express the formula lots of different ways, but it basically, it all works out to be the same foundationally. So I want to take year one number, or in this case, yeah, I'm sorry. year 2 minus year, oh my goodness, year 2 minus year 1 over year 1 times 100. Now, year 2, in my example here, is the alternative, right? Year 1 is the status quo. So in other words, what I'm saying, the difference is the numerator. It can be years, it can be weeks, it can be months, whatever it might be. Number 2, number 1, if you just want to call it that. The point is what I'm looking at is my operating profit under column 2, the alternative, right, was 5765. The operating profit in week, or column 1, right, the status quo, was 3975. 3975 also goes in my denominator. Now, I already have the difference, but I just wanted to show it to you laid out this way. The difference was 1790, right? So 1790 divided by 3975 times 100. Somebody tell me what that is. You guys have calculators? This is accounting class, for crying out loud. What's the percentage increase? Huh?
45.
Thank you, Logan. 45%. How many of you would like a 45% raise every week? Does that put it in a little bit of a different perspective? Heck yeah, you're gonna get the food truck, right? Because like we kind of hem haw. 17, I guess. But this gives you completely different perspective on how to look at that number, right? I'll take a 45% raise. Now, some of the other factors, the factors we can't quantify, might change your mind. You know, that's something that we'll get to consider a little bit later on. Okay, so food for thought. You guys ready? You're going to do one here for me. So this is a little, and you guys can work on this together, and this is how we'll wrap up today here. So this demo problem, I'm going to read it to you, and then you guys are going to work on it quickly. It's not graded. It's practice. That's all. Warm up, just like a warm up. Jim is a florist who runs Bountiful Floral Shop as a sole owner. So that's like a brick and mortar flower shop, okay? His typical monthly operating results include the following. So they're telling you in this first sentence, here's Jim's income statement. His sales, $4,000. The flowers themselves cost $800. Supplies are $300. Labor, $600. Utilities, $250. Rent, $720. Other costs, $350. He recently attended a trade show and was attracted by a national chain that offered him a referral service, baskets, and new flower arrangements in exchange for a monthly licensing fee of $1,000. So Jim would pay the trade show place $1,000, or not the trade show, the national chain $1,000, and they would sell his stuff on their website. Like, what's the flower? 1-800 flowers. You guys ever hear that? Yeah. Okay. Anyway, I don't order flowers a lot either, but I know those places exist, right? Anyway, and so okay, but he pays them $1,000 a month for this referral. Okay. He figures that the additional business from referrals will increase his revenues by 40%, flower, material, supplies, and labor by 45%, utilities by 10%, other costs by 20%. Rent will not change because he's still using the same facility. So you get where we're going with this? I just showed you AM Bakery up there, that illustration of status quo versus the alternative, and then the difference. You guys hear me? Okay. You're going to do that for Jim's flower shop, Bountiful Flower Shop. So it says, number 1, should Jim expand his business to be associated with a national chain? Support your answer. Well, you've got to do the differential analysis in order to figure that out. So I'm going to ask you guys to work on that. We're going to talk about this at the beginning of class Friday. So that's the first thing you're going to do. Number 2 says, if Jim can negotiate a different term with the national chain, what licensing fee makes him indifferent between the two choices? So I'm going to kind of, number 1, you're probably not going to recommend that he goes with the national chain. I'll give you a little hint there. But I guess my question then, follow-up number 2, does that mean Jim just stops and gives up and says, okay, this isn't going to work out? That's how I want you to think about number 2. So So number one, you're going to do a differential analysis just like the PowerPoint that we just did. So that can be your kind of your guide. I just want you to jot this down in your notes. This is practice, right? This is a warm-up. I want you to do that for Jim's bountiful flower place, right? And then we're going to discuss it first thing Friday at the beginning of class. Okay? All right. Any questions? Yeah, you got like 4 minutes. You guys can go if you want. Nap time.